wanted to quickly talk about daily confirmation when you're taking trades and how to look for confirmation so you can avoid losing or a trade versing on you and you just potentially losing a trade. So here's what I mean. So on a lower time frame, we can see that market structure, if you're familiar with smart money, market structure is currently on the bearish side, going downwards. We have a high, low, with supply in large candles representing that aggressive movement of what I'm saying, okay? So a normal trader, what they would do is, which is fine, a smart money trader, they only check their specific time frame, like the 1 hour. And yes, this is showing you that you can take trades downward. So they would do this. They would take their trade right there at that imbalance gap. And then they would put the stop loss somewhere around here. And then they would target this area. Or even this area. They might even target that low. So that's fine. But what the issue is this. If they wanted to enter again, they're like, oh my god, I won some money, let's enter again and make more money. They would try to enter on that next supply zone, right? And then look for another trade. Or up here. But the reason why you can't do that is because once you enter one trade, you should always go on the higher time frame, because if we move up to the daily chart, you notice how, before we go up to daily, we're on the 1 hour still. You notice how all these little wicks are wicking the bottom of this black line here, and it's kind of leaving all this liquidity. What I'm noticing is when I go to the daily chart, we can clearly see that there is actually an order block here that previously broke structure, and it's a high, not just an order block, but a high volume order block, judging from the volume here. That's the only indicator I use is the volume, because it's the only really legit indicator I like. Other indicators work too for other people, but I like volume. I just like seeing the raw data of money flow and capital flow. And so this is the 50% order block. This is how I take order block trades. So this order block here, right here on my screen, if you can't see it, the order block is right here towards your left. Okay, it has a white engulfing candle breaking the black candle, and it's two large blocks with little to minimal wick. And it broke previous structure right there. So what that tells me is I should probably stop taking sell trades, because this could potentially lead our current price to go and react off of that order block and potentially change trend on me. So what I have to do is I have to be aware of that, and now what I'm going to do is I'm expecting on the lower time frame for that to actually happen. So what I want to see is the structure to break here. I want to see structure break here. And I want to see price go above that area before looking for a area to enter off of, right? So the only way I'm buying Euro Australian dollar is if I see this high on that red line broken with demand and aggressive movement going upward. And that's going to confirm that order block on the daily time frame. So this was just an example of why you should always use all time frames, is because you may not know when the trend is actually ending. And always use daily time frames as confirmation to let you know when the trend may be over on the 1 hour or the 30 minute. So for long-term structure, I use the 4 hour, and the daily chart and the weekly. And for short-term structure, I use the 30 minute, the 15 minute, and the 1 hour. Okay? And if you guys do not understand that, or want to rewind the video and write that down. And I hope this video helped you guys. Peace.